morning everyone, this is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three important aspects which are going to impact the future value of rupee. The first one is dollar index momentum and 10-year US yield momentum. Second is emerging market currencies momentum, and third is oil price momentum. So let me start with the first one. So let us first start with US economy data. If you see the first table, all data are coming on a negative side. They have come below expectation and most of them have come prior से भी नीचे, which is clearly indicating that all is not well in US economy. Now if you see the second table, we have written positive in the remarks, but why it is positive? Because it has come above expectation, but technically speaking they have come lower than the previous one. That is also indicating that broad based all data are coming negative. Out of 17 data points in last 15 to 20 days, 11 to 12 data points are negative. Due to negative data point, dollar index have corrected from 106 level to currently trading at 104.96 level. Similarly, yield have also fallen. We are expecting both dollar index and yield to go down further. Dollar index, we are expecting it to move towards 102.50 kind of a level, and 10-year yield we are expecting it to move towards 4.30 level. If that happens, that is positive for all emerging market currencies. Now let us see what has happened in all emerging market currencies. If you see the chart table, all emerging market currencies have become stronger against dollar in last 10 to 12 trading session, and we are expecting the momentum to continue. USD JPY, which was trading at 160 kind of a level, strong intervention has been there from Bank of Japan side. We are because of which it has come down towards 152 level. हो सकता है थोड़ा सा bounce back करे, but the broader view of all emerging market currencies remain the same. Rupee जो था, it has been a laggard, but we are expecting it to take a pace in coming days. Now let us discuss what is the outlook for crude. On 15th April 2024, we discussed that crude oil price has given a sell signal, because of which we can anticipate that Israel-Hamas war will de-escalate. Exactly same has happened. We are expecting crude oil to move towards 79 and 76 kind of a level, and exactly the same has happened. Now the big question is, what's the view on crude oil now? Till the election is over in US, the story for crude remains the same. Sell on every uptick. We are expecting the crude oil price to move towards $72 per barrel in coming days, which will be positive for Indian rupee. Now let us discuss outlook for rupee. The first important aspect of the market is to eliminate what is not going to happen. If that view is clear, then chances of making money increases. So by looking at dollar index, emerging market currencies and crude oil, one view what we are getting with clarity is that rupee is not going to get weaker beyond 83.50 to 83.55 kind of levels. So if there is no upside, there can be two scenarios. Scenario number one, it can consolidate in a range. Scenario number two, it can appreciate. Currently, we are expecting the pair to trade in a consolidated manner between 83.10 on the lower side and 83.55 on the higher side. But the bigger view remains the same, that gradually the pair is going to move towards 82.5 kind of level. Once 82.5 is broken, we expect the pair to move towards 82. Exporters should not get complacent, and importers should only cover near-term imports. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter, chemical exporters, we are suggesting them that they should continue to hedge 100% on a back-to-back basis between 83.30 to 83.40 kind of a level. If someone wants to wait, they should keep a strict stop loss of 83.15 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. Between 83.30 to 83.50 kind of a level, they should cover 85 to 90% of the confirm order. If someone is hedging on an anticipation basis, they can cover 60 to 65% of entire turnover. Now let us discuss strategy for importers. Importers should focus only on covering near-term imports. They should cover 50% of their next 1 month imports near 83.25 kind of level. For remaining exposure, they can wait for 83 and 83.10 kind of a level. For the entire exposure, they can keep a strict stop loss of 83.60. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.